think this budget scores very well on everything. I mean, you can't have a complaint now. Direct taxes for individuals reduced. That would mean a big consumption boom. Capex, the other, consumption, capital investment. In both of them, the budget has delivered, and how? 10 lakh crore Capex plan, which is over 3% of GDP. That was better. The maximum we got was a 15% increase in Capex, and what the budget has delivered is a 33% rise in Capex. So there's both consumption and capital investment that has been encouraged, and it has been done without sacrificing on fiscal deficit, coming in at 5.9% as expected. And of course, there are many other benefits as well strewn over for green hydrogen, for electric vehicles, for chemicals industry. All told, I doubt, Prashant, we can complain, except perhaps the ITC shareholder. Everybody else should be happy.
ITC stock is back green, Lata. It's actually completely recovered.
Minus 2%.
No, ITC is absolutely flat. 0.75%. We saw a 5% swing down. It's absolutely flat. And that is basically because, the number which the FM mentioned was at 16%. But that is a particular specific which is much lesser than what the market was fearing. Right, the effective hike is lesser. And just one point, Lata, the market is happy as well, right? Yeah. I mean, 200 plus points on the Nifty. And we are at the day's highest point. So I think, this may be the initial first cut reaction. But I think, as you said, there seems to be a little bit for everything. The big thrust, of course, remains capital expenditure, which is now at an all-time high. Railway capital expenditure, outlays very much focused on building out capacity infrastructure.
I said consumer because of lower taxes, capital, Capex, fiscal deficit. I forgot the fourth most important one. Capital gains not touched.
Nothing on the capital gains.
Yes, nothing on the capital gains. And also lots for the middle class this budget as well, right? Tax slabs have been brought down, the tax exemption of up to 7 lakhs as well. In fact, Shireen is joining in now. She has a star panel with her. Shireen, over to you.
Well, thanks very much. Yes, that's the big headline, and I think the markets are giving a big thumbs up to the Finance Minister, Nirmala Sitharaman. She has delivered on pretty much what the market was expecting. Higher Capex delivered, and in a big way. As we've been reporting here on CNBC TV 18, will the budget deliver for the middle class, for the salaried class? With the caveat that, of course, the changes that have come in for the new tax regime, but the budget has delivered on that promise as well. There's plenty more there, whether it's railway Capex, or there's a plethora of other schemes that have been announced to take the inclusive growth agenda forward. But the man who got it right is sitting here with me, Tarun Bajaj. You said it will be 10 lakh crores, and that's exactly the Capex number that's come out. You said it would be 5.9% on the fiscal deficit. That's exactly the number that the Finance Minister has come out. You said there would be no change on capital gains, and that's exactly what the budget has delivered on. So congratulations to you to get the budget right.
You're putting me in a very difficult situation. I didn't have any clue on what the budget numbers are going to say. That was my own perception of what the budget would say. But I had also said, I think she's over-delivered on the personal income tax, which is a very good thing. And this was something that was expected by the people, and people were asking for it. So I think it's
on the personal income tax, Mr. Bajaj, because the caveat is that this will mean that you need to shift to the new tax regime, which really hasn't taken off in the last 3 years. Do you believe by announcing the measures that this is now finally going to get people to switch from the old to the new, even though that option of retaining the old continues?
We will have to read the fine print, but I think the maths must have been done. And I remember while she was speaking, she said up to 7 lakhs there will be no taxation. So if that happens and the tax rates are what they are, and obviously this will be without any exemptions being given to the taxpayers, I think a lot of people, and she also gave some examples, and I'm sure the department must have done their arithmetic where you see at this income what were you paying in the old tax regime and what do you pay in the new tax regime, and she gave 2 examples. If all that is what is contained in the scheme, I think we'll see as many number of people now shifting to the new tax regime as were giving in the old tax regime in the olden days.
You know, on balance, Mr. Bajaj, you were very clear just before we got into the budget in the last 1 minute. You said that you don't believe that this is going to be necessarily seen as an election budget. You said that the government is not going to deviate as far as fiscal consolidation is concerned. You were hoping that the government would incentivize state capex as well. That has come through as well. On balance, what's your big headline for budget 2023?
I think she scores maybe 11 on 10 on this budget. She's delivered on everything, and there were various demands by different sections of the society. Also, what you have not mentioned is she's also covered tribals, tourism, housing, and all those areas also. Along with that, a fiscal deficit of 5.9% and a capex increase of 33%. And now the other thing that we need to look at is that when it was started, the capex used to be about 1.7% of the GDP. Today it is 3.3, almost double of that. And if you include what is being given to the states, it's 4.5. If your fiscal deficit is 5.9 and 4.5 is this, your quality of expenditure is also improving quite a bit. And I think this is going to give a boost. And this year, other than the capex of the government of India, and the state governments will also spend more because their fiscal position will be better. The private investment will also start coming. So I think while there are headwinds in the world economy, I think India should be home, and home with flying colors.
Home and home with flying colors, 11 on 10. That's the number coming in from the former Revenue Secretary Tarun Bajaj here, who is, of course, our budget editor. 11 on 10 for the Finance Minister for delivering on all fronts. And, of course, as we caveat that, we will have to go over the fine print, but the headlines at this point in time certainly seem to suggest that the budget has delivered on all fronts. Lata, the market's reacting positively. Prashant,
Yes.
as you were pointing out, very, very strong showing.
You know, Shireen, it is a 11 on 10 from the markets as well. Actually, from before the budget speech ended to now, the markets have already climbed about 100 points. We were below 1% gains midway through the speech, and now we are 1.5%. In fact, as I speak, it has become 1.55%, 1.56%. So the Nifty is absolutely ripping up, and so is the Sensex, now up 1.8%. Bank Nifty is delirious, 2.5% higher. And why, I'll tell you, because the borrowing number has come maybe a tad lower, the gross borrowing number, and I think 15.4. The average was coming to 15.7 in several analyses we did. So the borrowing number is something which the market will be very happy. 15.4. My sense is they're not counting the GST bonds. But in any case, the bond market also is giving a thumbs up over there. It is a 7.3, 7.31. Before we went into the budget, it was 7.36. So clearly gains over there as well.
Apart from banks, Lata, the things which are doing well are all in a way tied to this big capex number, infrastructure number, right? Banks you highlighted, but look at, steel, which is doing well. Tata Steel is the second biggest gainer in the Nifty. L&T is number 3. The composition tells you JSW Steel. I can spot cement there. So, I mean, this is a capex heavy budget once again, and at least from large caps, this is the space which is doing the best. Madhu Khela is joining us, and so is Prashant Khemka. Need no introduction, really. Shankar Sharma, I'm told, is also with us. Gentlemen, great to have all of you with us here. Madhu, first reaction, Mr. Tarun Bajaj giving it 11 on 10 in terms of a score for the budget. I mean, the market is pretty exuberant as well. Your first thoughts?
Prashant, I would agree with Mr. Bajaj. From a market perspective, it's an absolute big thumbs up. Finance Minister seems to have delivered on every count the market would have expected her to deliver. Whether you talk of not tinkering, which was the most important requirement to keep the feel-good factor right, which was not tinkering with the capital gains tax regime. I think she's delivered there. Second, if you look at the quality of budget, essentially the capital expenditure has gone up, which is what we need, given that various parts of the world are facing recession or there is a fear of recession. I think by front loading the expenditure, India possibly would avoid it and come out with flying colors. And I was listening to the speech, Prashant. I think the amount of inclusiveness which is included in this budget, the thought which has gone from a medium to long-term perspective, really, really reaffirms my belief in India. And I would say markets from here would do really, really well selectively. You just have to choose your stocks right, and I would choose India-facing companies. I would choose companies which are linked more and more to economy rather than choosing companies which are linked to global sectors.
Well, those are the two numbers on your screens which we need to take note of. 61,000 crore rupees, that's the disinvestment target. Remember, the last one was 65,000 crore rupees. Once again, Mr. Bajaj, you got it right. You said it would be just about at that level, 61,000 crores. And here's the interesting thing, the FY24 nominal GDP being pegged at 10.5%. Remember, the economic survey pegged it 11%. Yesterday, when we were speaking to market economists post the survey, the expectation was that perhaps the survey has been a tad too optimistic with that 11% number. The estimate was anywhere between 10 to 12. 10.5%, Mr. Bajaj, is what they're going with.
I think it's a very pragmatic number, and 10.5 because the revenues also would be linked to this 10.5. So I think they have been pragmatic. They have not been pessimistic. They have not been very optimistic, but I think it's a good number, 10.5. So the real rate could be 6.5, and the remaining will be the deflator.
Okay, well,
I
for now, I think
more experts joining in. Prashant Khimka and Shankar Sharma also with us, and our two tax experts are also here. Prashant, your first thoughts? The markets are up and away at this point in time. What would you say about the budget?
Certainly, Lata. I think it's a very good budget. It builds on the foundation laid in prior budgets. It's very pro-growth. It boosts, very importantly, job creation. By putting thrust on two fronts. One is ease of doing business, and the other, a massive increase in capital outlays. So a lot of fine print still to be read, but for example, easing the compliance burden on 39,000 laws.
Yeah.
Further decriminalizing 3,400 legal provisions. These are very positive, which don't necessarily make for numerical or quantifiable headlines. They're very important. In terms of ease of doing business. Similarly, the announcements made on Gift City and related to startups, those are also further promoting job creation. And then on capital outlays, obviously, which the FM started with a big announcement on that, a 33% increase, particularly a 9-fold jump in railway budget in the last 10 years. And railways are a lifeline of sorts for nation's transportation infrastructure. That's a very, very positive move from a growth and job creation perspective.
Oh, absolutely. And you are seeing the big moves in the railway stocks as well on the back of that record high railway outlay that has come through. Just wanted to point out that ITC is seeing a bit of a relief rally right now. Just to put it into perspective, the NCCD, the union budget has, of course, raised the NCCD, which is the National Calamity Contingent Duty on tobacco products, by 16%. But this translates into a tax hike of just around 1.5%. So a less than 2% tax hike, it really comes as a relief, because the expectation was that it could be about 5% plus. So ITC is really the stock of the moment, 2% higher over there. We have Shankar Sharma joining in as well into the discussion. Shankar, seems like on all counts, I mean, there's a 1,000-point plus bump up that we're seeing on the Sensex right now post the budget. No negatives from a market standpoint, continues to champion the fiscal prudence path, no tinkering on capital gains tax, and huge 10 lakh crore allocation to infrastructure. Your thoughts? Do you see a follow-on up move in the market, post what you've heard?
Yeah, absolutely, Sonia. I mean, I think the concern in the market, at least from a narrow perspective, the stock market, was the LTCG period being changed, or maybe the rate being revised or whatever. But my sense was that given the episode in the market last 4 or 5 days that we saw, my gut feel was that the FM would not do anything to damage sentiment, because sentiment was very fragile going into the budget session. And at least that expectation was met. And on every other front, including personal taxation, I mean, it's been just a fantastic budget. So I just think the last couple of months, or maybe 3 months, have been a little, sideways for the markets. I think the markets have conclusively broken out. I mean, there is nothing not to like about this budget.
Okay. Well, let's get the first thoughts from the tax experts as well. Mr. Karavar, how much relief for income tax payers, both in the new system, no exemptions, and the old one?
So, and if just going back to what we discussed when we started out before the finance minister rose to present the budget, I said that, look, there is a need to go up on the exemption limit, which I'm glad has gone from 2.5 to 3 lakhs. And then we said that the maximum marginal rate needs to come down.
Yes.
And that has also come down partially.
From, yeah.
42 to 39, which is, of course, very, very welcome. But I think the clear thrust is for everybody to move to the new tax regime. It has not been a success thus far, but with this, there will be no option at all but for people to come there. The last question which you had asked before we broke was on real estate side. You had asked about real estate. And it has gone actually quite contrary to what we thought. So, first of all, there is no enhancement of the limits on interest and whatever else we are talking about. But this entire proposition that capital gains tax will be exempt only to the extent of 10 crore investment in a house is going to be a big one. That means that there's going to be sort of a negative for ultra high value housing, luxury housing. They will get negatively impacted by that.
Sorry, could you explain that, Mr. Kanavar? How would it work?
So until now, if you had only up to 2 houses, you could invest money capital gains tax into a new house. That was no limit on that, how much. So you could, for example, and I'm actually aware of cases where people may have realized a gain of 100 crores and invested in a big house, whatever else. Now, that exemption limit has been put to 10 crores.
I see.
So people who are selling houses above 10 crore have
No, not houses. People who are realizing capital gains, selling
So the house should be maybe
ESOP,
15
whatever.
crore at least. Okay, that's an ultra-rich category that is impacted.
That is no. So there is one segment of housing which will get impacted. So what you are seeing a boost, and one has seen this ever so often. People realize gains on shares of whatever else and made those investments that will no longer possible.
Okay.
So that's a negative there.
Okay. First thoughts from you, Ashok?
You know, I think the most important number I saw there was the tax collection number. It's 15% growth in tax collection, which I think is very real. So the maths actually, and we perhaps are understating that, the maths of the budget actually is very, very real. Mr. Bajaj said it earlier, and I think he's absolutely right. It's real maths. They've given us a little concession at the high net worth individual level by reducing the tax rate, and then they've taken away this particular benefit on the housing. So clearly, any speculative element in the housing is eliminated as a result of this. But I would also think that genuine people who have owned houses for many years where value has appreciated are also going to suffer as a result of this.
Just a word, just because he said credible math, the nominal GDP has been assumed at only 10.5% higher,
Correct.
not 11% as the survey put forth. And the average we got from the market was 10. So I think this will be seen as a very credible set of numbers.
Not too aggressive. Mr. Ramdev Agarwal is also with us, joining us now. Ramdev, great to have you with us here on the program. Your first take, what stood out to you from the budget?
Yeah, obviously the most debated and talked about capital gains thing has not come, so that's good. Second is that I think there was one provision where MSME payments will be allowed by the spending company only if it is paid out. So no credit limit for claiming exemption, claiming business expense. So I think that could be a little unsettling for a lot of companies which are outsourcing to MSME, if I read it correctly. So, and that could be good for MSMEs to get payment on time. So that was one thing in corporate expenditure thing. Second is, of course, this capital gains tax of 10 crores, which you just discussed. So, but I don't think there is much proportion, and there is actually mobilization is also just about 30-40,000 crores. So it's a no event for personal taxation, my sense is. So it's a status quo situation, and that is very good. I mean, there is nobody is changing anything. So I think we go back to our normal earnings and whatever is the momentum of the market.
Well, yes, Ramdev, as many commentators are pointing out, I think the budget takes forward what we have seen in the last several budgets, which is really cleaning up no extra budgetary items, credible roadmap in terms of numbers. And Mr. Bajaj, I want to get you and then I want to get Sajid Chinoy to comment on what the government has put out by way of estimates on the subsidies. FY24 fertilizer subsidy being pegged at 1.75 lakh crores, food subsidy at 1.97 lakh crores, petroleum subsidy merely at 2,257 crores. So OMC's had a long wish list. That clearly doesn't seem to have gone through or found favor with the government. Interest payments for FY24 at 10.8 lakh crores. What do you make as far as the subsidy is concerned?
So I think what the market was saying is correct. This time the subsidy bill was much higher. So this, if I add up the two figures, it comes to about 3.75, and last year or the current year it will be something more than 5 lakh crores. So I think there's a relief of expenditure to the extent of 1.3, 1.4 lakh crores. And I would say this is a very reasonable and the right estimate that the budget has made. And unless something else happens during the course of the year, I think we should be home with this kind of a subsidy provision.
Well, yes, that is that big relief. And do you believe that this also then provides that cushion? Because, everyone's worried about potential shocks as far as the current account deficit is concerned. But given the fact that we're now likely to see the significant cushion on the subsidy side, do you believe that there is some relief on that front as well?
The current account deficit will depend on how our exports, imports, the price of crude behaves during the year. But I think 4.4 was for the second quarter, but I think it would reduce. The commodity prices are coming down. So current account deficit, as the governor of RBI has also said, is quite manageable with the kind of foreign currency reserves that we have. But on this aspect of subsidy, what you're saying is it has also helped the fiscal deficit to be brought down to 5.9%, because there was a cushion that was made available because of less expenditure here and the budget size increasing. So that ensures that you're able to spend more on Capex, you're able to spend more on the schemes that you're required to spend more and still have a lower fiscal deficit.
Yeah.
Okay. Well, thanks a lot for that, Mr. Bajaj. Sajid Chinoy is also with us. Sajid, the big macro numbers seem to tally with our poll. It's a no complaint, big numbers, you would say?
Lata, this is as good a budget as one can expect. I haven't looked at the fine print, but let me tell you the big numbers here. As you pointed out, nominal GDP is 10.5. There are some expectations that are slightly lower, but 10.5 is very reasonable at this point in time. If you look at gross tax collections, at least the headline numbers, the growth here net of excise is about 11%. So it's just little higher than nominal GDP, which is very reasonable to assume. So in a way, if you remember before the budget, we spoke about three objectives here. One was to hit your fiscal deficit target, and 0.5% seems the right balance between growth and stability. Remember, the finance minister actually promised that in the next 2 years, the deficit will be down to below 4.5%. That sets us up for pretty meaningful consolidation the next 2 years. So they're on that fiscal glide path. There were no unpleasant surprises to the bond market. Both the net borrowing number and the gross borrowing number were within expectations. For me, the main issue was going to be on what the tax buoyancy is, and the early read is that the tax buoyancy seems reasonable. Maybe there's a little bit of downside risk to nominal GDP, but nothing that can't be made up somewhere else. And of course, the big thrust really is on Capex. And I can't say this enough, because we have to be cognizant of the fact that private sector Capex is going to take time to recover in a world that's going to slow meaningfully this year. States are lagging, PSUs are lagging. The center had to do the heavy lifting. So by pushing Capex, it's almost doubled in the last 4 years. It's gone from 1.7% of GDP to 3.3% of GDP. To double Capex and to bring the deficit down, I think, is a very artful balancing act on the macro front.
Oh, absolutely. And I think the market recognizes that, right? Just take a look at what L&T is doing right now. It is the top Nifty gainer as we speak. In fact, since June of last year, L&T has made a huge climb forward. I mean, it was at, what, 1,500 rupees in June of last year, and now it's 2,200 plus.
Sonia, one of the stocks that's done very well is Indian Hotels, because there was a specific thrust on tourism, and they have good results to back from yesterday. So Indian Hotels up 8.2%.
And in any case, hotels are packed, right? I mean, you know how the travel industry is
directly a beneficiary of the budget. Actually, on that, should I get Ramdev in a little more? Ramdev, now that, it seems to have delivered on no bad news in terms of capital gains, and, you know, I don't think you're going to change the EPSs of any company, at least not negatively, after the budget. Do you think there is a runway for the market at this point in time?
Yeah, so Lata, what has happened is that for whatever reason, market has corrected somewhat before the budget.
Yeah.
From 18,000 plus to almost 17,300-400. So there is a good correction in last 10-15 days. So, and there was a little fear also that there could be some change of the capital gains, and so there could be further selling and all. So that fear also gone, and now this event is also behind. So I think market has a natural tendency to bounce back, which is happening right now. And my sense is now the growth orientation which is there in the budget of 6.5-7% kind of a growth, and that seems to be there seems to be a lot of confidence that is going to come through, and that should reflect in the earnings of the companies. I think banks have been kind of banks have also corrected somewhat, and that is where I think big action is right now. So I think we are in normal situation now. Now we have to track how this growth, 10.5%, 11% nominal GDP growth, which will work out to be almost like 30 lakh crores. Who are the guys who are going to take the disproportionate pie of that and convert it into profits?
Okay. Well, I wanted to get both Prashant and Madhu into the conversation on the capital goods space, because that's clearly the one that's leading right now. Prashant, I was just mentioning how this space has already seen quite a bit of gains, I mean, in the last 1 year or so. And now, of course, this huge outlay. Do you think from a stock market or investor perspective, a lot of the good news is already in the price? Or do you see this as some sort of a structural up move that investors should continue to participate in?
Certainly, I think some of it is definitely reflected, the optimism, given the strong rally that these stocks have had over the last 2 years. But we have to remember that this comes on the back of a 10-year lull in capital goods sector. Pretty much capital goods sector went into a decline or in a no man's land from 2010 onwards. Prior to that, obviously, they'd seen a very strong rally from 2003 to 2007. So if now this thrust on capital outlays is sustainable and results in actual public and private capital expenditures, there could be several years of buoyant top line and bottom line growth for this capital goods sector.
Madhu, I'm sure that, within the short while that we've had the budget with us, mentally you've figured out which are the places to bet on, which is the area which is going to do the best from here out. So I'm going to ask you that. What is top of mind for you in terms of, taking bets from here? Go on.
So Prashant, I would emphasize, companies which are really linked to India and Indian economies, where you have to bet. Financials, of course, comes really on top of my mind, because let's, get what has happened even in the last 3 months. Maximum amount of foreign selling has happened in the banks, right? And they are now at a very reasonable valuation if I take a 2-3 year view. Even the private sector banks have come to a very, very reasonable valuation, large cap private sector banks. And even public sector banks post this correction are reasonably valued. So financial is one space. Second thing I would say, I was just hearing, I would say that infrastructure companies and things which are linked to capital goods, you will find selective opportunities. This is, you have 2.5 lakh crore rupees expenditure happening, Prashant, on railways. When did we hear this kind of a capital outlay for railway sector? So I am very sure that on the optically, when you look at it from a 3-6 month perspective, prices may have gone up and valuation may look little expensive. But if I take a 2-3 year view, considering that there is a visibility of earning, there will be opportunities in that space as well.
Well, Madhu, absolutely. We will, of course, discuss the markets in a second. I'll come back to you, Madhu, with your third point. But let me bring TV Narendran of Tata Steel into the conversation. Naren, everything that industry wanted, the large CII wish list, which was 33%, and that's the exact number that I remember Vinayak Chatterjee threw at me on this table just before we started the budget speech. 33% is what he wanted in terms of Capex. and that is exactly what the budget has delivered on. There have, of course, been other changes as well, but the broad thrust continues to be the heavy lifting to be done by the government to try and spur and accelerate growth. Naren, your rating of this budget on balance, Tarun Bajaj saying it's delivered 11 on 10. I want to get your headline number from you on the budget, as well as what you believe this can do to deliver growth.
No, I think the number is irrelevant, but I think the budget has been great. I think it's given us all that we've asked for and more. This focus on infrastructure, whether it's, overall infrastructure capex at the central level or the state level, which is being encouraged, or the focus on railways. I think that's very, very crucial, because we underestimate sometimes that the railways can be a big bottleneck for growth. So I think that's been huge. I also think the action to trigger consumption, I think a lot of action on the rural economy, on agriculture, will hopefully prop up rural consumption, which has been a bit slow over the last few months. And I think the actions on the taxes, etc., will also hopefully spur consumption. Focus on tourism is great for the service industry. That's an industry which has suffered for the last 3 years. So I think overall, pretty much anyone would be happy with this budget. All the asks have been granted in some sense.
Well, the asks that industry had have been granted, Naren, but the ask of the government that industry now pick up as far as the private sector capex is concerned. The economic survey did say that there are incipient signs of private capital formation, but given the fact that it has laid out a path of predictability, there has been no tinkering, no piecemeal tinkering. Do you believe that there are enough levers that have been provided for the private sector to now feel more confident about going out there and investing?
I think certainly, because even last year, if you look at the steel industry had actually announced a lot of capex, and it was the export duty and some of the macroeconomic issues globally which slowed us down. But I think even then, most of our industry, most of my peers are investing, we are investing, and that will continue to be there. So I think infrastructure investment is a great force multiplier. You will see investments happening in the cement industry, in the steel industry. Commercial vehicles are back to where they were 4 years back, pre-pandemic. They are also a bellwether, for the economy. If you look at mining equipment, construction equipment, they're all doing well. So I think capacity utilization is high, and I think this will be a crucial year for private sector capex to come back.
Crucial year for private sector capex to come back. And on the point about the rural economy, Mr. Bajaj, if I can address the MNREGS number with you at 60,000 crores versus the B of 73,000 crores. Now, this is essentially a demand-driven scheme. So the fact that there is a lower allocation versus the budget estimate suggests that there is a pickup or a recovery as far as the rural economy is concerned, less takers for the NREGS.
I think you're absolutely on spot. One thing which people would comment is that the government has provided a lower sum, but as you said, it's a demand driven. If more money is needed, it will be provided by the government. But the fact that there is a lower demand, that means they are getting employed elsewhere in the rural, in the urban segments. So I think that's a good sign for the economy.
Well, that is a good sign for the economy, and something that the survey had alluded to as well. But let me bring back the market participants. And Shankar Sharma, we're still seeing a very strong showing. The Nifty Bank up over 1,300 points at this point. And I think there is consensus, and I'll get to Shankar in just a bit, but let me get Ramdeo back into the conversation. Ramdeo, I think there is consensus, whether you talk to economists, you talk to market participants, or you talk to industry, that the budget has done what it could, and perhaps even a little bit more. At least there are no negative surprises that the markets have to deal with, or corporate India has to deal with. Again, the expectation that this would be an election year budget, and hence there would be some fiscal profligacy, that has completely not been borne out at all. So what is the larger sort of message beyond the numbers? What's the larger message that you take away? Do you believe that, as the economic survey pointed out, that we are poised potentially for a 7 to 8% growth in the rest of the decade? Do you think this lays the roadmap, the blueprint for us to move forward?
Looks like, the growth orientation, growth emphasis, and unleashing the potential. She said in her, that priorities, unleashing the potential, looking at judiciary, and all the suggestions which are coming in every sector. There is an intention to solve all the problems, even whether it is to do with the Ahmedabad IFC, International Finance City. So I think there are a lot of things which are happening, and further it will happen. So the growth focus of the government to engender a growth of above 6%, 6.5%, 7%, maybe 7.5%, 8% in the years to come. That seems to be the core focus. Balance sheets are very good. Corporate balance sheets are very good. Banks would have never been in a more stronger position. Corporates are in very good situation. Government is able to do stimulus of about 2.5%, 3%. I mean, pre-COVID, we are talking about 3.5% kind of fiscal deficit. Now we are very comfortable at about close to 6% of fiscal deficit, which unleashes about 7 to 8 lakh crores every year. So I think there is a lot of stimulus in the economy, untold like that, but I think there is a lot of growth focus, and that extra fiscal deficit is going towards enhancing the capital expenditure. Now, if by chance, second half or something, private sector Capex comes in, which will come in maybe at some point of time, then I think we are going to have a sustained 7-8% kind of growth.
Okay. Well, Shireen, there are a couple of things in the tax fine print which we have to ask our experts, because there could be disadvantages for some people. Ashok Wadhwa, to you first. The market-linked debenture is going to be now taxed. Capital gains on market-linked debentures going to be taxed. Did I get that right?
No. So Lata, just to correct that, what many NBFCs, and this is specific to NBFCs, because for NBFCs this was an alternate method of financing their liabilities, particularly after all the mutual funds stopped funding the NBFCs. This was a very popular method. So instead of just simply doing a borrowing, you did a borrowing on a debenture which was linked to the market price and had an artificial coupon which was unlikely to be breached, and you listed it on the market. The consequence of that was that interest which would otherwise be normally taxable in the hands of an individual at full tax rate, or in the hands of a corporate at 25% tax rate, got the benefit of capital gains tax and was therefore taxed at 10%. They have removed that arbitrage and said, now market-linked debentures will be treated like a normal debt instrument and you will pay full tax. So it takes away the attractiveness of MLDs as a source of borrowing, particularly for NBFCs.
I will try and get a NBFC on air as well. Just one other sector is insurance. You know, if you can have SBI Life, HDFC Life, ICICI Pru, these stocks are down between 4 and 5%. HDFC Life is down about 5.5%. So that's a big reaction. Mr. Kanabar, you were telling us that here also there is a change, right?
Yeah. On high-value insurance.
High-value insurance. So if the insurance premium is above a particular annual number, which is 5 lakhs, and it's a ULIP sort of an insurance, then the money that you get back at the time of your redemption is going to be treated as not exempt and be treated as taxable in your hands.
Okay, this is something the mutual funds wanted because it was making the rival insurance product very attractive. So I think that advantage is gone.
Also, the new tax regime becoming the default, it kind of, because insurance had incentives, etc., right?
Yes.
In the old one. So all in all, it is a bit of a negative for the insurance.
For the insurance company, for all savings which were driven only by tax, it's going to be negative because you don't get any deduction under the new scheme. And probably that's a correct way to go.
Okay. Well, let me get Prashant Khemka in on banks. 3.3% higher on the Nifty Bank. Prashant, there's a small advantage for them in the sense that bond prices have gone up. There is a 10 basis point fall in the 10-year bond. It was 7.39, now at 7.29 after the limited borrowing program that was announced. So anyway, your take on financials, both insurance and banks?
Certainly, see, on banks in particular, whatever is pro-growth and good for the economy and boosts job creation is generally positive all around for banking sector. And as Ramdevji, I think earlier mentioned, there's already a lot going for the banks. Last few days, I think the banks were beaten up somewhat unnecessarily for a variety of reasons. And the budget being so much positive, there is recovery of what was lost over the last week or two. And plus, on top of that, the overall positive factor for the economy, where banks are the biggest beneficiaries, that's reflecting today. Okay. And for the insurance sector, yes, some of these tax savings, tax-related business that they were getting over the years, that would get hit. And so some pullback is very reasonable to expect.
Okay. Defense expenditure has gone up from 4 lakh crore to 4.3 lakh crore. if that's what you were looking out for. Actually, compared to the budget estimates was 3.8 lakh last year. But actually, in the revised estimates, they have spent 4 lakh crore. Now they're going to spend 4.3 lakh crore in the coming year.
I don't know if the street is disappointed with that, because all the defense stocks are actually under pressure now. So whether it's, I mean, of course, they've rallied a whole lot as well, right? So BEL, HAL, all of these stocks, Power Dynamics, all under pressure. Perhaps some profit taking is what you're seeing there. Mr. Kanabar, anything else? I mean, you spoke about, some of the nuances that you're just reading through right now. Anything that stands out for you from a market perspective?
Nothing from the market perspective. There are a lot of changes which are sort of anti-abuse changes, lots of provisions which earlier applied only to resident taxpayers, now being applied to non-resident taxpayers, etc. Reorganization, things relating to faceless assessment, things related to tribunal, all of which are more tax-driven and more anti-abuse provisions, and I don't think much of it impacts the market really.
Okay. I just wanted to highlight on subsidy. Fourth subsidy was originally planned at 1 lakh crore, but we ended up spending 2.25 lakh crore. That's revised, everyone knows that. And now it has been brought down by about 50,000 crore. Sorry, I'm reading fertilizer. I'm sorry. Fertilizer subsidy was kept at 1 lakh crore. We ended up spending 2.25 lakh crore. It has been reduced now in the next year to 1.75 lakh crore. Okay, we will get Sajid's views on that, but I believe we have Sanjay Malhotra, the Revenue Secretary, with Shireen. Go ahead, Shireen.
Policy. So to begin with personal income tax, that was a space that everyone was keenly watching out for. And all the changes that have been announced are in the new regime. Firstly, what do you mean by the default, that the government has now made the new regime as the default regime?
See, one thing is that people, let me clarify that people will still have the choice to go back to the old regime. Only thing is, it means is that if people don't choose, and people do, are lethargic, I mean, if they don't have any difference in, their taxation between the two schemes, then the default scheme for them becomes, whatever we say is the default scheme, the return that we give to them. So the Act has been amended to say that the default scheme will be the new scheme and not the old scheme. But they can continue to choose the old scheme year on year, not once, but year on year, as long as there is no business income. That's what the provision was even earlier. For business incomes, this choosing is only once, because there are certain exemptions which they enjoy with respect to business incomes. But those individuals who are not having a business income, they can make this choice year on year, 1 year, if they find that the new scheme is beneficial to them, they do not have any deductions, but next year they have more deductions and they feel that the old regime will be beneficial, they can go back to it.
So when we talk of the rebate, the hike in the minimum rebate from 5 lakhs to 7 lakhs is also in the new regime. Do you think that the changes in the slabs in the new regime is something that will boost people to switch to the new regime?
Certainly it will boost, because see, 5 lakh in the old scheme is in addition to the exemptions, which means that if one is having deductions, investments of up to 2 lakh rupees, and it becomes equivalent to the 7 lakh rebate that one is giving in the new regime. Having said that, the new regime, if one looks at, say a person who's having an income of 15 lakh rupees, for his taxability to be the same as in the old tax regime, he would have to invest 3.7 lakh rupees or have deductions totaling 3.75 lakh rupees to have the same taxability as in the new regime. And this investment limit, changes depending on the income tax slab that you are in. So, for example, if your income is 7.25 lakh, you'll have to invest or have deductions of 1.5 lakh rupees.
So when we talk of new regime, is there any estimate how many more people will be added and how many are currently opting for the new regime?
It's difficult to hazard a guess, but I think the way we have structured it now, there will be more in the new rather than in the old.
Any estimate how many have opted as of today, the new regime?
I'll not be able to give you the figures, but all I can say is that the new scheme is the way forward. The government has made it very clear that we want to move away from exemptions, and going forward, this is going to be the mainstay so it's a continuation of the policy of the government. It's not something that is new. It is a continuation of the earlier intent of the government, and we are carrying forward that intent.
On TDS, online gaming is something that we are keenly watching out for, because there was a limit of 10,000 rupees, that only above 10,000 rupees of winning amount was subject to TDS. Now that limit has been removed. So how will this structure work? How will the tax policy work for online gaming?
See, online gaming, although we have removed the limit, but that limit was on individual games. So, although now we have removed that limit, but now you can aggregate your winnings over a period of time, and you can also set off the losses. So the limit is removed, but that limit actually comes into play only when you withdraw money from the wallet, and not, for money or the winnings, which remain in the wallet. So each winning does not get taxed. It's the composite winnings minus the losses, the money, net money, that you take out, minus what you had put in. So it's the net income to you that gets taxed, and similarly for TDS.
So if 500 rupees of winning is there, will that be taxed too?
So if there is a 500 rupee winning and he takes out the money, yes, it will be taxed.
And if he keeps it in?
If he keeps it in, it will not be taxed as long as it is within an year. But yes, in case he has a winning of 500 rupees and next game he does not take it out, and the next game he loses, and he had paid 20 rupees, let's say, and he loses another game, so he loses 40 rupees. Now he takes out money, so he will be paying tax only on 460 rupees.
My last question on cigarettes. How much money is the government going to yield from the duty that has been hiked on cigarettes? NCCD of 16%.
It's estimated to be more than 1,000 crore rupees.
So a 16% of NCCD hike is going to yield 1,000 crore rupees. And what about the changes that have been made on silver, etc., on the indirect taxes side?
The total revenue additionally that we hope to mobilize through our indirect tax proposals is about 3,000 crore rupees. 3,000 crore rupees.
Many thanks for joining us, sir.
Well, that is Revenue Secretary Sanjay Malhotra in conversation with my colleague Timsy Jaipuria. The message from the government is very, very clear. Don't be lethargic about moving from the old tax regime to the new tax regime. The government believes that they have put enough sweeteners in place so that people move to the new tax regime, which is now the default scheme. Of course, the option to stay with the old tax regime continues. But my star panel here with me, Sanjeev Puri, Sanjeev Bajaj, Janmejay Sinha, and of course our budget editor, Tarun Bajaj, is right here with me. Sanjeev Puri, there was a little bit of a scare for you when she announced that 16% hike in the NCCD for specific cigarettes. The stock reacted sharply, but then has recovered, coming off its intraday lows. On balance, what does that mean for ITC?
Well, I think, first of all, Shireen, I won't want to really get into company-specific here. I think we're all really participating from CII for broader discussions.
I know, but since that was a very specific announcement that came in that impacted ITC.
I'm happy to have another conversation with you, but let's keep this, otherwise I know this can go on for some more time.
No, just an initial comment, but on balance, what do you make of that?
Let's keep it for another conversation.
Okay, we'll keep it for another conversation. Sanjeev Bajaj, the wish list has been delivered on. Whatever that CII had put on the table by way of recommendations, the finance minister has delivered on. But specifically, I also wanted to understand if you are concerned with the fine print on insurance policies above 5 lakh rupees of income being taxed, because stocks are reacting to that. But first, your big picture view on budget 2023 and then the fine print.
A big picture, very much a budget that balances growth with fiscal prudence. And as you mentioned, Shireen, a number of CI recommendations find their place in the budget, from the public Capex increase to 10 lakh crore, whether it is rationalizing of personal income taxes at the lower level. We are seeing significant focus in agri productivity and efficiency, actions on the green energy industry and opportunities there as well. So overall, I would say very good. And at the same time, sticking to the fiscal deficit target of 6.4% this year and aiming to go below 6 to 5.9% next year. So this is a welcome balance that we are seeing. A number of other initiatives as well. Continuing the central guarantee, the credit guarantee scheme for MSMEs, expanding that by 2 lakh crore. That's a welcome move because as growth comes back, MSMEs will find this as a significant support to get growth in. The focus on urban infra. We talk about ease of doing business. We very much talk about ease of living as well. So improving urban infra, the support to the states, but linked to performance with timelines, as well as the development of the mini bond environment. All of them are
Chatterjee's bucket list. I think virtually everything on his bucket list has come through, right?
Very much so.
So Sanjeev Puri, on balance, growth acceleration, that seems to be the thrust as far as the budget is concerned. Infrastructure development, trying to drive investment, again, delivering on that front on account of the kind of allocations that we've seen?
Absolutely. I think it's a very progressive, growth-oriented budget. I think it continues the vision and the path that the last budgets have taken. So it's building that momentum. And I think certainly it augurs well for the economy. Sanjeev has covered a few very important issues. I just like to call out a couple of them. I think it was very nice to see the focus on tourism and the whole idea of developing 50 model areas where tourism can be developed, because it has got tremendous economic multipliers. You know, whole ecosystem will create a lot of small and private entrepreneurs besides, you know, the infrastructure-oriented projects. So that's I think a very welcome development. The second, agriculture, you see, has always received a lot of attention in the budget. But what I'm really happy to see, over and above whatever has been happening, is two things. One, I think, is the sharper focus on bringing technology into agriculture. So the support to agri-tech, agri-entrepreneurs, and developing the public digital infrastructure for agriculture. I think that's a terrific move. And the second is this whole move towards a cluster-based approach. Cotton has been taken as the first value chain. And that is the only way, in my view, that agriculture can be transformed. FPO as building blocks, cluster-based approach, and hopefully with this experience we can take it to other crops over a period of time. So I think overall, very good budget, and it's not just about, you know, looking at the agriculture or tourism sector, but a lot about the social infrastructure, a lot about inclusive development, a lot about local level development. I think these are really good developments that augur well for the economy.
Well, you're right. After 7 priorities, inclusive development was the #1 priority that Finance Minister Nirmala Sitharaman put on the table. And I cannot remember a single budget that has spent as much time as it did on millets, on a single grain. There was so much conversation and so many announcements that came in from the Finance Minister on millets. But I would imagine that's another conversation that you and I need to have, because I know that that's something that ITC is focused on. But Janmejay Sinha, let me come to you. You're perhaps the only one who's disappointed, because your big hope on the banking sector of the government bringing down its holding, that hasn't gone through. But otherwise, I mean, you cannot quibble or argue with either the budget numbers or the direction.
So I completely agree with both the Sanjeevs on the overall macro, movement of the budget. There are 3 things which are not catching the attention, which are really important. She said that she wants the regulators to review their regulations, taking public input. I think it's time for the regulators to start taking public input on their regulations and starting to make them consistent. I think that's a very big announcement which hasn't really captured the attention. The second thing which is really important is India may be the only country in the world which may start empowering its citizens with their data to make them have wealth. Yeah. You know, and she said that you can have a central repository of data which the citizen will allow different government agencies to access. You know, that mindset is really critical, because Indians will become data rich before they are rich. And so that data should be allowed to make them, get some of the wealth that they allow others to get. And the third was the accent on transition to green. I think, after poverty, green has to be the next most important issue for India in all the different elements, with regard to water, the cleaning of those, the sewage and the sewage treatment plants, It's really important because water will become a binding constraint for us. So some of these things were a bit subtle, but they were out there. And the fact that it was uneventful is great for a business because you can plan and predict. And for the last 4 years, the government has actually managed to do that. And for that, we can't, really thank it enough.
No, I think you're absolutely right, Tarun Bajaj. I think that there is consensus that predictability has become the norm as far as the last few budgets are concerned, and this budget builds on that. So it's really an exercise, a continuum, so to speak, and that's what this budget seems to have delivered on as well. Many interesting aspects coming in here from industry, but let me also welcome the Sherpa to the G20 and the former CEO of the Niti Aayog, Amitabh Kant, because as the Finance Minister pointed out, the budget is also aligning itself to India's aspirations of leading the G20 as the presidency of the G20 is with India. Mr. Kant, always a pleasure. Appreciate you joining us here on CNBC TV 18. The Finance Minister talked about India's G20 presidency and, of course, thrust on infrastructure, thrust on public Capex, continuing inclusive development, health, education, 157 new nursing colleges, centers of excellence as far as artificial intelligence are concerned, and of course, mission mode on tourism. That was the big message that the Finance Minister has held out. Your first reaction, Mr. Kant?
So, Shireen, I think this is a budget truly for a new India. It's heavily focused on capital expenditure, 33% jump with 10 lakh crores. That's one part of the story. The other part of the story is that it's really going to, with all these exemptions and, on the tax side, it'll drive the consumption story of India, which is very, very important and significant. And thirdly, to my mind, the huge focus on urbanization, which is very, very important to my mind, and travel and tourism. These are key focuses. But I think the real highlight of this budget is really about going digital across the board. It's not sector specific, but across the economy, and going green across the economy, because it's about digitization and going green, which is going to really put India on an accelerated path of growth. And that is what this budget spells out. The tech transformation story of this budget is quite enormous in terms of energy storage, in terms of pump storage, in terms of battery storage, in terms of a whole range of new areas of growth, electric mobility, green hydrogen, all the sunrise areas of growth which will enable India to technologically pole vault in many ways. So that is really the defining feature of this budget.
Yes, there is a lot of thrust on the digital infrastructure, as I pointed out in the budget. But Mr. Kant, I also want to understand from you on tourism specifically, because that will be linked very closely, of course, to what we see happen as far as the G20 is concerned. I haven't seen the allocation just yet, but she's also talked about the need for greater public-private partnership in the tourism sector. What would you like to see happen from here on, now that it's been given mission mode status in the budget?
So two key things on travel and tourism. First and foremost, the budget talks about 50 key centers of growth which will be selected through a challenge route to drive growth. And second is about a very key strategy for promoting travel and tourism. The third one is about skill development in the travel and tourism sector, which is about really employment creation, because tourism has a multiplier impact. But the important thing about travel and tourism is that the expenditure that you make on capital, on infrastructure, gives it a huge thrust. So, 3 years in a row, you are focusing on airports, you're focusing on rail. I mean, look at 50 airports. Look at the huge amount of outlay you've provided to road and rail. That will have a massive, massive impact on travel and tourism in due course, and make India an outstanding country for domestic tourism, but also for international tourism. That is really the key. The infrastructure side of growth story of India will have a massive multiplier impact.
Mr. Kant, always a pleasure. Appreciate you joining us here on CNBC TV 18 with your quick take on the impact of Budget 2023. We will, of course, come back to you for further details. But Sanjeev Bajaj, Mr. Sinha and Mr. Puri, what I want to understand from you is on the disinvestment side, because there the expectation and the ask was that the government should bat higher. It's kept it at about 61,000 crore rupees, pretty similar to what we've seen. What do you make of that? And it also explains the fact that the government acknowledges that this is a complex exercise. It is a challenging exercise, and so it's mindful of not just putting any number out there which you then don't achieve.
Very clearly, it's an acknowledgement that it's a complex exercise. The good thing is that the announcement that are already made, there is no opposite direction over here, so hopefully those go ahead in time. It's also, I think, a implicit acknowledgement that we're going into election year. So yes, that was one ask that didn't get met. There'll be time to ask again.
Sanjeev Puri, do you walk out of this budget feeling even more confident than you were at the start of the year? How has this budget changed the needle for you specifically?
Certainly, one is more optimistic now because there is consistency, there is certainty of the way the economy is going to pan out. It's very growth-oriented budget, a lot of investments happening into the economy, a lot of facets to enable the economy.
Will it accelerate investments further? Because that's been the hope that private Capex should now start to move.
Absolutely. You know, there are always, it's already started in small measure, and capacity utilizations are above 70%. And a lot of interventions have happened in the past, be it the tax rates and so on and so forth. So I think this is really setting the pace for private sector investment to really come in.
You highlighted some of the subtle elements, but if I were to ask you for the headline that captures Budget 2023, what would it be?
I actually like the word that Sanjeev used about the fact that it is both prudent and growth-oriented. And you know, one thing that we are not highlighting enough, that the world was looking at India this time, and the fact that we've managed to stay prudent and yet invest in the places which the world is actually looking for, ease of doing business, infrastructure, that we are, the economist has said we are the best country in the world, etc., for investment right now. So that just gets reinforced. So we are building on that positive global momentum.
You know, and I think the Prime Minister had sort of given us a hint that this is going to be a budget that not just India but the world is going to be watching, and so it would have been odd if the government had deviated from fiscal consolidation, etc., which it has not. It has stuck to that glide path, but the market's clearly reacting to all of that, and of course the many budget announcements. Lata, tossing it back to you.
Actually, the big loser here, the market meanwhile has seen a decent amount of profit taking. The Bank Nifty went up 3.3%, now it is up 2.3%, and the Nifty as well was almost 1.8%. At the moment, it's just about 1%. So a bit of creaming of profits has happened. But a big deal of creaming of profits has happened in insurance. Mr. Kanabar, if you can explain, HDFC Life has lost about 7%. Why are they losing so much?
So again, I'm not a market analyst, but I'll tell you what are the budget impact. There are two impacts. One is that when everybody moves out of the current tax regime where you got a deduction for life insurance premium and you are now going to move to a new regime where you will not get such a deduction, then obviously money which is going only for tax purposes will not go. And that is a very, very substantial number, the amount of deduction which is going under Section 88, etc. So that's one part. And second is this entire proposition that if you have taken insurance policy for which the annual premium is more than rupees 5 lakhs, then when you get back that money, it will be treated fully as taxable income. So that makes another thing. So the high value policies which were taken by people, which ostensibly the government believes is not really an insurance policy, but a savings policy, the income coming back, the money coming back to you being income taxable, which would mean that people will not go for those high-value policies. These are the two things which are likely impacting insurance.
Do you think
companies.
people will move in a significant way to the new tax regime?
I would think so. I would very much think so.
This is clearly
just imagine that you're going, first of all, exemption 2.5 to 3. Almost till 7 lakhs, you don't end up paying any taxes at all. Everything is moving towards. So the government is just prodding everybody to go in that direction. And it looks like people will go there.
And she said that up until 7 lakhs, I think you don't pay any tax because you have an exemption which is higher, plus you have the other deductions like standard deduction. Okay, Mr. I mean, Ashok, if you can explain this capital gains and, the disadvantage to NBFCs again. I think that was missed out.
So let me talk about capital gains first. Currently, the law provides that if you divest and have a capital gain, regardless of the amount of capital gain, and you invest that gain into a residential property, then you are fully exempted from that gain. So let's take a simple example of I have a house, I sell that house and make a 10 crore gain or 15 crore gain, and I invest all that 15 crores into a new property, all 15 crores were exempted. Let's take another example. I'm an ESOP holder or I'm a new generation entrepreneur. I sell my shares, make a capital gain, and I invest all that gain into a property which is worth whatever amount. All that capital gain from selling of ESOP or shares was tax exempt. What they have now said is that up to 10 crores of gain will be tax exempt. So if I have 20 crores worth of shares and my cost is 1 crore and my gain is 19 crores, earlier I could invest all that 19 crores and buy a house and I would be tax free. Now 10 would be tax free and on 9 I will pay full tax, which means I'll pay under the old regime 42% tax. My tax cost goes up by 3.5 crores.
On a lighter note, that's a good problem to have, right?
The point is
percentage of people
the
will be paying
high income earners have got some benefit on the surcharge being lowered. But on the other hand, if they make money by selling their shares, the capital gains they make is going to be taxed more. They cannot escape by buying property.
Lata, just one thing, Mr. Kanabar, this insurance, just to come back to insurance, it says this will not affect the tax exemption provided to the amount received on the death of the person insured. So this then exempts.
So that would be only ULIPs and things like that which will get exempt, which will get challenged by the term policies. So if you've got a fixed, so there are policies, for example, where you pay a single premium,
right,
and you get the money back after 10 years, 15 years. All those policies will
be impacted, but not life insurance policies.
So just in spirit, what they have done across both, whether it is MLDs, whether it is insurance, whether it is capital gains, they have removed the arbitrage. So if something was otherwise taxable as income and you were treating it as exempt or capital gains, they've gone back and said, we will see through it now.
Okay, I just want to
go to Sajid because he's been waiting by patiently. Apologies, Sajid. I wanted to ask you the subsidy amounts. They have, of course, the revised budget has increased it from 1 lakh to 2.25 for fertilizer. Food has gone from 2 lakh to almost 3 lakh. But for the coming year, they've both been reduced. Do you think all those are legit reductions?
So Lata, remember we spoke before the budget that the reason that you could have your cake and eat it too, right? Increase certain levels of expenditure and reduce the deficit is because there were going to be large subsidy savings this year. And if you look at the numbers, the savings actually 0.7% of GDP. And that's what allows the government to both reduce the deficit and increase expenditure net of subsidies, which has gone up from 13.3 to 13.6. Let me make 2 points, 2 quick points. One is the quality of spending has improved in the last 3 years, but keeps going up. Even net of subsidies, revenue expenditure is coming down, capital expenditure is going up. To understand how much this has changed in 4 years, 4 years ago, the ratio of revenue expenditure net of subsidies and interest to Capex used to be 4. In this budget, it will be 2. It's halved in the last 4 years. So the quality of expenditure is going up. The only area where I'd be a little bit cautious is on the tax side. We now have more data. So if you look at nominal GDP with 10.5%, maybe a little high, but is reasonable. But the tax buoyancy that's assumed after taking into account this year's, the tax cuts, is about 1.2. So 1.2 is the same as this year, and maybe there's a little downside risk to that tax number, but there's enough padding on the expenditure side to make that up if it doesn't materialize. That's the only number I'd be focused on in time to come.
Your kosher with the tax revenue buoyancy that they are assuming?
So our own numbers are lower. Our own numbers for nominal GDP and for tax buoyancy are lower because this is a year where both growth will slow and the deflator will be slow. So nominal GDP is going to be much lower. So we have lower numbers, but that's a quibble. There's so much uncertainty, on prices, on growth, that we'll see where it pans out. But that's the one number I'd be looking on because it's been 1.2 this year. I would have liked to see a number closer to 1 next year. The government's assumed about 1.2. But, there is padding on the expenditure side in case that doesn't materialize.
Okay, by the way, the market has come off quite a bit from the highs. It's down almost 180 points from the highs of trade. We hit about 17,970 and now the market is off quite a bit. There is, of course, a little bit of disappointment with the divestment target as well. We'll talk about that in greater detail on the other side of the break. Let's take a short commercial break. Our discussion continues on the budget announcements in just a bit.
When our big boss was